Hello, this is the daily Forex report for July 15th. We are looking at the US Japanese yen pair first. This pair moved significantly lower, very quick to the downside, moved back into basically the range that we had previously. Did close at some key support areas historically. Going to keep an eye on this one, see if it moves further down. We'll talk a little bit more about that here in a minute. Let's take a look at where we think this pair is going. Overall, this pair continues to move sideways. We may have a slight bias to the downside. Look for it to potentially go as high as 88.96 if we get a reversal, possibly as low as 86.68. Look for some resistance around 88.00 and look for some support around 86.95. Now looking at the Euro USD pair, this pair surged higher, definitely has a bias to the upside, moving higher. If it continues, look for some resistance around 1,3000 level and look for some support around 128.57. Now the pound US dollar pair surged higher as well. It is moving to the upside, biased is up. Look for it to potentially go as high as 151.34, possibly, that's actually the low, 151.34, possibly as high as 155.52. Look for some resistance around 15500 and look for some support around 153.95. Now looking at the US Swiss, this pair surged lower, is moving lower, biased to the downside. If we get a reversal, look for some resistance to kick in around 10475. And as it moves lower, look for some support around 103.50. Now we have the U.S. releasing their CPI report for June at 8:30 a.m. Eastern Time tomorrow. The consensus on this is that it has moved higher from negative 0.2% to 0.0%. Year to date, they're actually showing a drop from 2% down to 1.2%, which would be good news for the U.S. dollar. Now, as far as what I'm looking at, let's take a look at the U.S. Japanese yen pair. This is the only one that it moved a lot today, but didn't really break out of the range that had been in, unlike the other three major pairs. If you notice, I've taken a longer view. I mean, we can zoom out a pretty good ways, and you can see that we are currently right about here. You can see we've had areas of the same area of support in the past before moving higher. We've dropped even lower than that, though. If you look, try to draw a straight line here, through here, we've had this area where it dipped even much lower, below basically to the 85 mark, 85.00 mark, back almost a year ago, or not quite a year ago, about 6 months ago, 7, 8 months ago, and so it dipped lower. The question is, will it dip lower now? Well, if we get a break to the downside, we're definitely going to look for it to go down to the 86.38 mark, because that is where we have some key areas of support right here. And remember, we're at a key level of support already. So as this thing drops, you can kind of take a look at where you should place your stop losses and where you should get in the market and out of the market. You can actually draw some trend lines and get a little bit clearer understanding of where things are. You can, of course, scalp the market, or you can look for a little bit longer term. Just kind of depends on what you want to do. So if you just want to take a couple pips out of the market, look for it to drop through these trend lines and then down to this area of support around 30 pips lower. If you're going to be in it for a little bit longer, look for it to drop all the way down to the second line and grab about 80 pips, 85 pips. Of course, there are more support lines if you go back historically that are a little bit lower, and you could just trail it on down. I do believe that we're going to see this pair continue to move lower. Well, that about does it for today. Until next time, this is Jason Fielder. Good trading.